thankful to Will Skillman for putting this thing together. Yeah, I've been absolutely blown away by what he's been able to do with this. I got interested in small bay flex. Interestingly, you guys have heard of Hamza Ali? That name mean anything to anybody? One of my partners a couple years ago, this is January of 2024, went down to Austin to a flex seminar that Hamza Ali put on, and God bless Hamza Ali. Rob Khalees, good to see you there. I'm sorry I stopped going around the room because I realized I was going to run out of my half hour if I kept going. But nice to see so many people in here, and I appreciate all you guys showing up for our first event. But kudos to Will for what he's put together, and I hope you guys continue to stay in the chat and putting questions in there. It's fun to see. I come out of the self-storage industry, so you guys know a little bit about me. I got into self-storage in 2021 at the peak of the wave of self-storage. Self-storage obviously has hit its challenges over the last few years. And in 2024, when I first got interested in flex, I got exposed to it, started to just dive in. And I think that's kind of why this was a fun topic for me to want to talk about. What I love about flex and why I'm so attracted to it, there's a couple reasons, right? Storage is a great industry, fantastic. The returns for people that get into storage are unbelievable. But at the end of the day, it's a business to consumer model where most people that are renting a storage unit are storing grandma's, bed stuff and couch, and it's not serving a largely greater purpose in the American economy. It generates a lot of money for investors and for the owners of the facilities, but there's not an underlying net positive for me. And for me as an entrepreneur, I always want to get involved in something where I can kind of be proud of what it is that we're doing. I've been an entrepreneur for the last time somebody signed the front of my check other than myself was 2001. So I'm 25 years into this entrepreneurial journey. And the ability to go build something that then enhances the ability of small business owners to do what they do is really enticing to me. That's a story that I can get behind. And when you start then digging a little deeper and starting to understand the American economy and where it's headed, and, I'm not Nostradamus by any stretch of the imagination, but if you start doing a little research, there's no headwinds to feel like we're going to go backwards in the way the American economy has developed in the last 40 years, right? When I was a young kid in the 1980s growing up, my grandfather worked for AT&T for 40 years and retired with an incredible pension from AT&T. He was a lineman running lines. My uncle had the same exact job. That doesn't really exist in the same way anymore. That's not the way the American economy works. And if you start studying statistics, you start studying the census, the growth of small business owners is astronomical, right? And not only small businesses on the census are 500 or less employees. So you got to get a little more granular than that when you're talking about small bay flex, right? When you start looking at the growth of small businesses that do not have W-2 employees, it's even larger. The number of trade businesses is increasing very quickly. So as I started looking at demographics, it only makes this thesis that much stronger. And I know you guys came on here because I'm supposed to be talking about picking markets. But I think before you start getting into picking markets, you have to understand what is it you're trying to get? Like, why are you doing it? What are you trying to build? And is that market going to be something that works for the product that you're trying to build? So I want to dig into a little bit of what my process has been like and how I'm looking at this. And by the way, I'm not the be all and end all of this. When I say we're S3 Partners, the company I work for, we're setting out to build a portfolio of these from the ground up. We haven't broken ground on any of them yet. So I don't by any means want to pretend like I'm the expert in this. Here's what I love about this industry. And another reason I should caveat that we built 320 self-storage facilities from the ground up. And we built a few flex projects as an owner's rep project management company. So when it comes to understanding the markets that we want to go to and understanding the economics of what building one of these looks like, we have a very good read on that. We haven't built one that we own yet. So I don't want to misrepresent that in any way, shape, and form. But I do want to tell you what I'm looking for. The first thing I would say, and this is the most important, I think, thing to understand as you're looking at markets, Will is a great example. He's local, right? He wants to be in Cincinnati, Ohio, or within a day trip of Cincinnati, Ohio, if he's going to buy or he's going to own something. We're the opposite of that. We'll go anywhere in the country. We've got 8 ground up developments right now, and they're in 5 different states around the country. One's in California, one's in New Jersey, one's in South Carolina, Tennessee. We're everywhere you can be in the United States, we'll go to. So how do we pick a market and how do we understand the market? The first thing, and it's ironic, I'm actually sitting in a lunch breakfast joint right now. I'm on a site visit today, right? And I drove 6 hours last night to go look at a market that I'm not from. And I'm hanging out with a broker today. And I'm going and looking at every property in this market, right? We have a piece of land that we want to visit. And the first thing we did is we're going to go look at the existing properties. And we're going to understand, is the product that's here what it is I want to build? Because small bay flex is, you can have 1,000 different setups of what small bay flex looks like. I think that's important for you guys to understand. What do I see small bay flex as? For us, no tenant improvements. That's how we see small bay flex, right? We are not BKM. We're not Faro Point. We're not building 5 to 50,000 square foot units with dock high doors where we're going to do a bunch of TI for tenants that are going to stay with us for 30 years. We're building 1,200, 1,500, 1,800 square foot units. Anyone care to guess why 1,200, 1,500, and 1,800? Other than Rob Calise?
60 deep and 30 wide.
30 wide is the important number there. Anyone know why?
Get a dock door and a man door next to each other.
We got a drive-in door and a man door. 30-foot wide.
Yeah, drive-in.
30-foot wide is the limit of what I can do with light gauge steel and not have to build a pre-engineered metal building, right?
Okay.
That does not mean for you guys on the call, you might want to build a pre-engineered metal building. If you feel like in your market, the demand is for that flexibility to go have, I just toured a site this morning where I'm at, where they've got one tenant taking 4 2,500 square foot units. It's an athletic company, it's a sports training facility, and they want the whole 10,000 square feet. With light gauge steel, I need a retaining wall every 30 feet. So I can't open the space up the way I can with a pre-engineered metal building, right? I'm saying this to you guys because I want you to understand before you start digging, what do you want to build? Because it's wildly important. If you don't know what you want to build, you can't identify if the market needs it or not, right? So as I'm doing my site tours today, what I'm finding very quickly is that what I want to build doesn't exist. Where it does exist is in the middle of a cornfield, a long ways from Main and Main. Now, here's what's cool for me on the site visit I'm at. The place in the cornfield, a long ways from Main and Main, is still getting prices that I can underwrite to, right? The only way I know that, guys, is by coming out and hanging out with a broker and going and seeing those sites and talking to the people that are there. So this is the thing I would say that, and why I love small bay, way more excited about this than I am about storage. On storage, I can go to 4 different data aggregators. Tract IQ, I can go to 5 now, Proprise, StoreTrack, Yardies, there's one at Radius Plus. I can go to 5 different places and I can get a rundown of all the local rates for self-storage in a trade area, right? That ease of access to data has allowed for massive oversaturation in the market because everybody has access to the data. They all see a place where they can build and it makes sense from a underwriting standpoint. And all of a sudden you have 3 different facilities in the same 1 mile radius that are going up at the same time. That's not good. What's great about small bay flex right now is there isn't that data aggregation, right? You can't just go on a website. You can't even go on CoStar and find out exactly what these facilities are leasing for. So what does that mean? Well, I got to go do the homework old school, right? I got to go 35 years ago when my boss, Barry Sherman, first got into storage, and he would go rent a storage unit at every competitor in a trade area. He would walk the facility and he'd count locks on a door to see what their vacancy rate was, right? Because there was no alternative at the time. We're still at that place in flex from a data standpoint. So first thing I would say when you're choosing a market, number 1, and I would write this down, know what you want to build. Know what it is that you define small bay flex as. What is your vision of it? Because you can be a million different things. And if you don't know up front what your vision is, your build costs will go through the roof during the process as you start adding little variations, right? Number 2, go do the research in your market. Is that product there? What's it getting for leases? What's the vacancy there? And the only way to do that is make relationships with local owners. I've on multiple site visits just walked into businesses in flex parks and found out what they're paying. You know, I went to a market where the leases I could find were $13 a square foot triple net that were listed on CoStar and Crexy. The guys were paying $24 modified gross was their lease rate.
Oh,
Big difference in terms of what I could find publicly versus what the guy who was running a food truck business out of an 1,800 square foot unit. Dilapidated building, wasn't pretty, wasn't nice. He was paying like $2,800 a month for an 1,800 square foot building. It was insane what he was paying for rent. Might not have been that high. It was like $23 a square foot triple net, or gross is what it worked out to. But the moral of the story is when you're researching a market, the industry is still so fragmented, right? And for those of you guys who are looking at acquisitions as a strategy, there's still a lot of opportunity there where there's markets where there's product that's getting 17, 18 bucks modified gross, and there's product getting $10, $12 modified gross because the landlord just doesn't push rents. So go and do the research and find out. And then find out in that market as you're doing the on the ground research, there's no replacement for going and putting boots on the ground in the market. You have to see it. You have to see what's going on. What am I looking for beyond just competition and flex? Well, who are going to be our tenants? There's really two major types of tenants that we're looking for, right? We're looking for trades and we're looking for service companies. And so there's two things we want going on with that, right? We want to have households. We want to know how many houses there are. For us, we use a 20-mile drive time as a demographic to determine that, right? What's the population that my service businesses are going to be able to service reasonably in a time that makes sense for them? Some markets are going to be a little different, right? If I'm in Greenville, South Carolina, the drive time might be a little bit longer than if I'm in Philadelphia, Pennsylvania. So I'm going to adjust for that, right? But what are the number of doors that I want to see in a 20-mile drive time? And I'm going to change that based on a couple of things. Am I in a high growth market? We're looking at some markets where the population increase estimate in the next 5 years based on current pipeline of multifamily residential projects is 20% plus, which is massive growth. I don't need as many doors in that 20-mile radius for my service businesses, because what kind of businesses am I going to have in a flex park? Well, I'm going to have those tradesmen that are servicing those massive, right? If I got $1 billion multifamily development in a market, right? And it's not in pre-planning, right? It's in bid or it's under construction. I can have 15 clients in a small flex park living just off of that one project. I could have the whole park, quite frankly. You know, if I got a 70,000 square foot flex park and there's a $1 billion worth of ground up development going on in that market. On the flip side, I live outside of, I don't know who that is that has their mic on that's making noise, but if they could mute, I'd appreciate it. There you go. Thank you very much. Yeah, Will, I appreciate it. If I'm in Philadelphia, there's not any pockets of Philadelphia that have 5% growth in the next 5 years. So I need the alternative, right? Whereas in a real growth market, I might be really happy with 200,000 people in a 20-minute drive time. If I'm in Philadelphia, I know I'm going to be more a plumber who's doing house calls, right? He's not doing major ground up development projects. So I need more roofs, right? I need more people that are in that trade area that my service type business is. I might be heavier towards cleaning companies, pool guys, things that are more taking care of existing companies. But again, I'm going to do the boots on the ground work with local brokers to find out what's reasonable in my market. One of the fun things about this business, anyone care to guess what the first thing almost every broker I talk to about 1,200, 1,500, and 1,800 square foot units says? Almost every broker I talk to, same exact comment. Happened again this morning, actually.
I have a guy.
No.
There's not enough.
I all the time, John, I hear that product doesn't exist in our market.
Oh,
Yep.
and over and over and over again. 2,500 square foot mixed, right? Where they have some drive-in, right? And some dock high, it exists. We just toured a facility this morning. The company built a 32,000 square foot facility. They used 28,000 of it themselves. They got one 4,000 square foot unit that they lease out. There's a lot of that product around there that's flex industrial, but a company built it for their own use, right? There's not a lot of this small. One of the reasons we know that there's a thesis here is coming out of storage. One of the reasons storage has been saved in the last few years. There's a lot of storage facilities in the United States right now that are getting a higher price per square foot on their 10 by 30 units than they're getting on their 10 by 10 units, right? And they're renting out multiple of those 10 by 30 units to a single person. And how inconvenient is that for a contractor to have multiple units across multiple storage facilities to store their stuff that they need? So we know the demand is there. It's a matter of finding where the right place to go identify it. And this has been pretty simple. This is not it's not like rocket science what needs to happen. You got to put your boots on the ground. You got to see what the existing product is in a market. There are markets where a lot of this stuff is getting built, right? Everyone here, I think, is familiar with Cody Payne. If you're not familiar with Cody Payne, get familiar with Cody Payne. Of everybody that has data, they have the best data. If you don't send them a message for a World Engine report right when you start digging on a ground up development project, I think you're insane. You know, once you've gotten a little bit into something and you feel like you're going to send an LOI, shoot Cody and Michael Tran an email and ask them for a World Engine report on it. They'll do it for you for free. And they'll give you a lot of these demographics that I'm talking about. One of the big demographics that they know how to search for that I love, that I don't even know how to find without them, is the number of incorporated businesses in a trade area, which is super, super helpful to know, right? And you can start comparing and contrasting different places. One of the things that I love as I go into this, and it goes back to what I talked about earlier, if I'm in New Jersey, I'm going to have a massive amount of small businesses in a trade area versus if I go to some growth areas in the Southeast where they're not as populated yet, they're smaller. So I'm playing that trade-off game. You know, what's the ground up development look like? Is that going to save me in this? Or do I have this area where I just have this growth of small businesses that are going to be able to fill this? It's not rocket science. Get your boots on the ground, talk to local brokers, find out exactly what you want to build and see if it exists, and then just go do your homework on what's there. One big piece of this puzzle that I think is going to be crucial for us, and I say us because this is a nascent asset class. That's the wrong word. It's not nascent. It's been around for a long time. This iteration of it is just growing. And one of the real reasons I'm so happy for Will starting this place, storage is such an awesome industry in terms of the way people treat each other, by and large. There's like 1% of people in storage who are jerks. 99% of people are really, really cool. Unfortunately, my grandfather, David Clark, happened to be doing business with one of the 1% for a while. We won't mention that. I'll leave that alone. What I would really love to see in this asset class as we start to build it over the next 5, 10, 15 years is that spirit of cooperation and information sharing that allowed for a long time storage to grow responsibly. What's happened in the last couple of years in storage is it's grown irresponsibly. People have started developing over the top of each other. And so I hope and I ask of everyone on here that as we move forward in the next few years, let's keep talking. Let's keep the lines of communication on Small Bay Industrial Basecamp open. Where are you trying to build? How big are you trying to build? What size of the facility are you trying to build so that we don't start building on top of each other? And listen, I think we're a long ways from oversaturation in this asset class. I think there's so much room for and so much need in the market. We know there's so much need in the market. Why? Rates have gone up so markedly in a very short period of time. Supply and demand is capitalism. When you see rates in most markets that were under $10 5 years ago and they're high teens now, you know there's demand for the product, right? What we don't want to do is build so much of it in a short time that we ruin that demand. I'm going to cut off short. I got 4 minutes left. I'm going to open up for questions. Anybody that has anything they want to ask me that I maybe didn't talk about. Go ahead, Paul.
Hey, just a quick question.
And he raised his hand. I love it.
Yeah, I'm used to these calls. Quick question. In Charleston, South Carolina, we're trying to buy something within the city center, and we're seeing rates as like 150, 200, 250, 300 plus dollars a square foot. Is that pretty foolish from your perspective, buying it in close to town, high rates?
When you say rates 250, you're $2.50 a month
Like $250 a square foot purchase price.
purchase price. I mean, listen, that all comes down to what they're getting for rents. You know, I can't tell you yes or no until I see what their rent roll looks like. I haven't dug in, quite frankly, Paul, to Charleston in a deep way where I ought. There's some markets you could tell me I already know what you can top end your rents. I don't know Charleston off the top of my head. I would hazard the guess, but I'd have to underwrite it. I mean, at the end of the day, it's going to come down to what are they getting for current rents? What's the rollover on their current leases? And what do I think the mark to market is in that market versus what they're charging, if there's any upside on that to make it worth that price? I can tell you there are certainly markets where $250 a square foot is a reasonable sale price, you know. And we're, quite frankly, we're underwriting things that we're looking at building at a 7.5 cap exit based on cash flow that we're going to generate. That'll be north of $300 sale price a square foot. So it all comes down to what's the cash flow going to look like. That answer your question all right?
Yeah, perfect. Appreciate that.
And by the way, reach out, because one of the things S3 does happily is we'll do a high level underwriting for you, but we can also get in the weeds if you want to and do a real high level underwriting. We're lucky that we have our director of development is an absolute G. She's really, really good at underwriting stuff and understands this asset class well. We can help with that if you need it. Brian Kelly, go to us.
Hello, thank you. The report from Cody Payne that you talked about, is that just for ground up development, or could that be, because I'm looking to buy a property right now that's currently existing that has already small bay garages?
Email him and ask him.
Okay.
Not going to hurt to ask. I can't answer whether or not it's targeted to acquisitions, but Cody makes his living off of brokerage, so he's going to be able to help you one way or the other. He's going to be able to give you some insight.
Yes, I believe it would be for an acquisition.
Yeah.
Okay. Cool.
It's certainly not going to hurt the information that they provide.
Yeah,
So,
I figured that.
yeah.
I figured that, but sometimes it's just specifically for that reason. But really, I'm just kind of looking for the, supply and demand, which I kind of did it on my own, but I'm still looking for, as much information as possible.
More, yeah. And look, at the end of the day, they also do really good feasibility studies if you need one for the bank. So it doesn't hurt you guys to, as I said, they've got more data because he's been selling this stuff for 20 years. He's got more data nationally than anybody. He's been aggregating data for a long time. It doesn't hurt to start that conversation early. And if you do need a feasibility as you go to the bank, he can help with that piece of it too. DC.
Another quick question on that one.
Go ahead.
First time I'm going to be going for a loan for this acquisition from a bank.
Yeah.
For a loan for an acquisition, do they require a feasibility study, or?
Every bank is different. Every bank is different. Sometimes they might, sometimes they might not. Yeah.
Small regionals won't typically, Ryan.
Yeah. That 100%.
No, I've learned a lot from the self-storage industry, but I know there were specific banks that did like loans specifically for self-storage. Is there also banks in this asset class that similar, or not yet?
Not yet. Not yet. And by the way, important to note, SBA loans, you have to have a month-to-month lease. So you can't really get SBA loans in small bay flex unless you're really specifically doing month-to-month leases, which is, not what everyone's going to do. So just know that if you're going that route, that you've got to really understand what the rules are for SBA. It's not always applicable to what we're trying to do.
Thaddeus, that was going to be my key question, is the optimal lease term for these sticky tenants, gross or triple net. And by the way, all of my grandchildren have hair. I just want to be on the record.
Well played, my friend. All right, he's my second dad. How about that? All my grandfathers have passed away, so I was trying to fill an empty hole. My dad's still around, God bless. Great question. Market to market is going to be different. We tend to think that, especially for these smaller units, explaining a triple net lease is not always going to be worth the value of a triple net lease. So we're tending to think we're going to have a flat rate, and we'll eat a little bit of listen, reassessments can be really painful. And one of the big values of a triple net lease is that if the tax man comes and doubles your taxes, you can pass that through to the tenant. And it doesn't kill you on the bottom line as much. Storage has felt that in the last few years, David, you know that as well as anybody. But on the flip side, like who's your tenant going to be? And ultimately, any successful real estate project serves their tenants. And so we kind of see it as modified gross being the way to go with a flat fee that sort of incorporates what your triple nets would cost. And then small escalations, right? Little different than storage where it's month to month and they use ECRIs and somebody can get a 200% increase in their price in a year, 3% year over year. Lease terms is a great one, guys, and I'd strongly encourage you to think this way. Lease term is not as important as when are your leases coming up, right? So we might not have a standard 36-month lease. We might have someone with an 18-month lease. We might have someone with a 32-month lease. We might have someone with a 48-month lease to try and make sure that we don't have 50% of our park coming up within a 2-month period, right? Or even a 1-year period. I don't want 60% of my park leases to expire the same year because I want to minimize my vacancy risk there. So you might have some guys that are on a month-to-month lease and you're charging them a heavier price to be able to get that. And I think you can afford to do that as long as you're strategic about what the overall picture looks like.
Gate or no gate?
No gate for us. These days we're building some storage with no gate. We're using technology to kind of offset some of those security issues that we had. In this industry, with small bay, because of the in and out nature of the tenants, on a really high touch storage tenant might visit the storage unit 15 times a month. We're talking about people that are going to be in and out 2-3 times a day. It just gets to be a little challenging to have a gate there.
Mezzanine or no mezzanine?
Percentage of the units for us. Not all of them, but a percentage of them. Again, varying degrees of amenities trip so that we can give to someone what they want. We'll build the footers in so we can add one on units if we feel like we need to. But our design right now is limited percentage of them will have a mezzanine. Not something we expect to be able to charge a per square foot premium on. It's more like an amenity value add.
Bathrooms or shared bathrooms?
Bathrooms mostly. We may have like 20% of a unit where we have really Spartan, 1,200 square foot square box, and they have one shared bathroom in that unit, in that building. So again, varying degrees of amenities. Guys, I don't mean to be a pain in the butt, but I'm on a site tour today and my broker that I'm rolling around with, I'm here. I'm on Basecamp. I'm very easy to get a hold of. You can find me very easily. Reach out if you want to talk more about this. I love to talk. I love to share knowledge. I think sharing information helps all of us. Really, really grateful for Will and what he's put together here. I think this place is going to be an incredible asset to everybody. And I'm looking forward to being as involved as I possibly can be and helping people in any way I can.
Thaddeus, we appreciate it. These are all great questions to take to the community and start engaging and start conversation. That community, I started it and I appreciate the love, but this is not my community. This is everyone's community. And I want it to grow and I want it to be what you guys want it to be. And I look forward to these calls every week. And if you have any feedback, shoot it our way. We can, we're not married to any sort of format. And we can make this whatever you guys need it to be. This is for all of us. And I love the collaborative sense, Thaddeus. I think that is the key over everything else. So I appreciate everyone showing up on this call and hopefully it'll continue to grow.
Thanks a million.
25 people on the first call ever. You may think this isn't your thing, Will, but you deserve a lot of kudos for it, man. Really, really well done. And appreciate everybody for the great questions. Thanks all.
All right.
Thanks,
Cheers,
guys. Thanks,
All right.
Will.